Thank you for joining us at XM.com. In this preview video, we'll be looking at the Bank of Japan policy meeting coming up on Tuesday and the outlook for the yen. I'm Cristina Marujos. With me today is Marios Hadjikyriacos, our senior investment analyst. Marios, there is growing speculation that the Bank of Japan might abolish its ultra-loose monetary policy when it meets on Tuesday. Do you think the era of negative interest rates might be coming to an end?
Hello, Christina. The era of negative interest rates is coming to an end. The question is whether that's going to happen next week or next month. Now, let me explain. We've seen some very encouraging developments lately in Japan. For example, we got data this week showing that the Japanese economy avoided a recession in the second half of last year. We've seen inflation in Tokyo accelerating recently. That's usually a good indicator of what inflation is going to do on a national level. And most importantly, Christina, we've seen some early results from the spring wage negotiations between big labor unions and big businesses. And the early results are very positive. It seems that Japanese workers are going to get their biggest pay increase in 3 decades. That's very important because the Bank of Japan considers wage growth a leading indicator of inflation. If workers are getting higher wages, that means more spending in the economy, and that probably means more inflation in the future. So the conditions for the Bank of Japan to raise interest rates are certainly there. However, the markets are a little bit hesitant. The market is pricing a rate increase next week as a 50-50 coin toss almost, because the Bank of Japan has disappointed markets in the past. So there's a little bit of hesitation to bet on a rate increase. Now, ultimately, Christina, I think that the bottom line is the Bank of Japan is almost certainly going to raise interest rates. Whether that happens next week or next month, it doesn't matter a whole lot. The fact is that they will exit negative interest rates probably this spring.
And now, Marios, let's turn to the market reaction. The yen staged a strong recovery on the speculation that the Bank of Japan might raise rates this week. So how could we see it move after Tuesday's meeting?
Yeah, so look, if they raise interest rates, that's good for the yen. And if they don't raise interest rates, that's probably negative for the yen, but the disappointment might not be massive because they're probably going to keep, even if they don't raise interest rates, they're going to keep the prospect of raising rates on the table for next month. So that's going to cause some volatility in the yen, especially because the rate decision is, as I said, priced like a coin toss. Now, the bottom line, though, for the yen, Christina, is that yes, we've seen the yen recover a little bit lately on speculation for a rate increase. However, the yen is still the worst performing major currency of this year. Investors just seem hesitant to bet on a lasting recovery in the yen. And the reason, I think, is that even if the Bank of Japan raises interest rates, that's probably going to be a one-off move. There isn't much appetite for any rate increases beyond this one. So the bottom line here is that even if we see a rate increase from the Bank of Japan, it's probably going to be a symbolic one, and the interest rate differential that has devastated the yen in recent years, that's going to stay in place. So I don't think this is going to be the beginning of a lasting recovery in the yen. And in fact, I think that for the yen to truly recover, what we need to see is a weakness in the global economy. The yen needs global growth to come down. It needs investors to start panicking about a recession a little bit more. And it needs interest rates in the rest of the world to come down. I think that could be a story for the second half of this year, but we are not quite there yet.
I see. Marios, thanks so much. The Bank of Japan meets on Tuesday. This was a preview here at XM.com.